Welcome back, everybody, to another deep dive.
Yeah.
Today we're going to kind of dive into a little bit of a story I think you'll find interesting.
Oh.
A little bit of a corporate deceit
Mm-hmm.
that would make, I think, even the most seasoned investor raise an eyebrow.
Okay.
You might be thinking, okay, another financial scandal.
Right.
How original.
Yeah.
But trust me,
Okay.
the story of Akazoo, a supposed music streaming giant, is a wild ride. And I don't think you'll want to miss this one.
Yeah, this should be a good one.
This company, for a fleeting moment in time, convinced the world that they were poised to take on Spotify.
Oh.
Now, this is
interesting.
where it gets interesting because Akazoo was a near total fabrication.
Wow.
So we're going to get into inflated numbers.
Okay.
We're going to get into a CEO with a shady past,
All right.
fake app reviews,
Uh-huh.
and a shocking lack of due diligence by investors.
Wow. That's quite a story.
It's pretty wild, and I think a good lesson in critical thinking as well, because we're gonna go through this and see how easily things can go wrong, even in the what we would think of as a very glamorous world of tech and music.
Yeah, the world of startups.
Right.
I mean, it can be very tempting
Yeah.
to just sort of jump in without doing your research.
Yeah, absolutely. And sometimes, a lot of money gets thrown around.
Yeah, FOMO, fear of missing out.
Yeah.
It's a big thing in the startup world.
So Akazoo, this company comes out and they're saying that they are this music streaming powerhouse boasting millions of users and a revenue stream that would make your head spin.
Okay.
To top it off, they go public in 2019 through a SPAC merger.
Right.
And if you don't know what that is, a SPAC merger, it's a special purpose acquisition company. It's just a faster, less rigorous way to go public compared to a traditional IPO.
Right. It's sort of a backdoor to go in public.
Exactly.
Yeah.
And for a while, they were riding high. Their stock price peaked at $7.49 a share.
Wow.
Not so bad.
Not bad at all.
And that's where the cracks start to appear.
Okay.
The thing with SPACs is that a lot of times that due diligence process can be a lot less stringent than a traditional IPO. So companies like Akazoo could actually capitalize on that, knowing that investors might not scrutinize their claims as closely as they should.
Yeah, makes sense.
And it's mind-boggling how Akazoo's facade went unchecked.
So nobody really...
I mean, they claim millions of users, but a quick peek at their YouTube channel showed a paltry 32 subscribers.
32 subscribers.
32.
Wow.
You'd think somebody would have noticed that.
You would think.
Right.
Yeah. We're a company that size, that's pretty suspicious.
Yeah. I mean, even
tidy preference.
a streaming service with demonstrably fewer subscribers than Akazoo claimed to have an exponentially larger and more active online presence.
So how is it even possible?
It's a head scratcher. You would think something as basic as that, comparing social media metrics, would have raised a red flag.
Yeah.
But investors poured millions into this company.
So they were really blinded by something.
It seems that way. And I think part of it might have to do with what's called irrational exuberance.
Irrational exuberance.
Yeah, it often grips the market, especially during periods of rapid growth.
Right. People get kind of swept up in the hype.
Yeah.
Yeah.
And the fear of missing out takes hold.
Yeah, FOMO.
And they fail to ask the tough questions.
Right.
It's very easy to get caught up in the excitement. When everybody's talking about something, you want to get in on that.
Yeah.
But as we'll see, Akazoo's claims were riddled with holes.
Okay.
Like Swiss cheese.
So they weren't just exaggerating.
I mean, they bragged about massive user growth in Russia and Brazil, places where their app wasn't even available.
Oh, wow. I mean, come on.
So they were just making stuff up.
Essentially, yes.
And it begs the question, how much scrutiny was applied by the SPAC sponsors that helped bring Akazoo public?
Right.
Even a cursory glance at their alleged markets would have exposed these inconsistencies.
Yeah, I mean, if you're going to invest that much money, you'd think you'd do at least a little bit of research.
Right. So we've got this company with inflated user numbers, a practically non-existent online presence, and a business model that seems to defy basic geography.
Yeah.
But hold on tight, because this is where it gets really juicy.
Okay, I'm ready.
Because the financial shenanigans
Oh, boy.
were just the tip of the iceberg.
Okay, so there's more.
There's more. Akazoo wasn't just playing fast and loose with user numbers. They were cooking the books,
Oh, no.
claiming millions in revenue that simply did not exist.
Wow, so they were committing fraud. essentially.
Pretty much.
Wow.
And when you delve into their financials, the discrepancies are just glaring. I mean, they were bleeding cash despite claims of soaring profitability.
Yeah.
That's a huge red flag.
And that kind of negative cash flow is a major warning sign. Yeah.
For sure. Okay, so who's the mastermind?
Right.
Behind this grand illusion, enter Apostolos Zervos.
Okay.
Akazoo CEO, a man with a history that should have sent shivers down any investor's spine.
Okay. What's his story?
So his previous involvement with Velti, a digital ad company that also crashed and burned due to accounting fraud,
oh, wow,
is a rather telling piece of the puzzle.
So this isn't his first rodeo.
It's like he had a master class in corporate deception.
Wow.
But wait, there's more.
Okay.
Remember those glowing app reviews that Akazoo flaunted as proof of their stellar service?
Yeah?
Well, turns out they were mostly penned by, drumroll please,
let me guess,
Akazoo employees.
Akazoo employees.
Talk about faking it till you make it.
Wow, that's bold.
I know.
That is bold.
And so they went to these extraordinary lengths to create the illusion of a thriving business, fabricated user numbers, inflated revenue, even fake social proof, all to lure unsuspecting investors.
It's amazing how far people will go.
Yeah, and as with any house of cards, it was only a matter of time before the truth came tumbling down.
Yeah.
And it was a hedge fund called Quintessential Capital Management that dealt the fatal blow, exposing Akazoo's carefully constructed facade for the world to see.
So these guys were like the fraud busters.
Yeah, pretty much. Their short report released in April of 2020 meticulously dissected Akazoo's fraudulent activities, highlighting the financial discrepancies, the lack of actual users, and even enlisting an app analytics firm to confirm their suspicions.
Wow.
And the findings were shocking, to say the least. The analytics firm revealed that Akazoo's app was being downloaded a meager 40 times a month.
40 times a month?
That's a far cry from the millions of users they claimed.
Yeah, that's a huge difference.
Yeah, and it was the undeniable evidence that solidified Quintessential Capital's case. The stock plummeted, trading was suspended, and eventually Akazoo was booted off the NASDAQ.
Wow.
And that is how the music stopped for Akazoo.
What a story.
But, this goes beyond corporate greed and deception.
Right.
It's a cautionary tale that highlights the importance of critical thinking and thorough due diligence, especially in the world of investing.
Absolutely. You got to be careful out there.
Yeah, so what became of the masterminds behind Akazoo in 2021? They reached a $38 million settlement with the SEC over the fraud allegations.
$38 million.
Yeah. And to add insult to injury, their auditor, Crowe, also faced penalties in 2023 for their role in this fiasco. Clearly, there were some systemic failures that allowed this scam to flourish for as long as it did.
Wow.
So this is just the beginning of our deep dive into the Akazoo saga in Part 2. We're going to dig deeper into how they pulled off their elaborate scheme and explore the crucial lessons investors can learn from their downfall.
I'm looking forward to it.
Stay tuned. Welcome back. It's wild to think that Akazoo managed to snag a $152 million investment through their SPAC merger.
Yeah.
Despite all the glaring red flags we talked about in Part 1.
It really is kind of mind-boggling how so many seemingly savvy investors could be duped by, what we know now is such an obvious charade.
Yeah, it seems like they played the SPAC game perfectly, taking advantage of the system's weaknesses.
Yeah, I mean, if you remember the SPAC boom we were talking about earlier, there was that gold rush mentality at play. Everybody wanted to get in on these SPACs.
Right.
And I think investors were so eager to jump on, that next hot IPO that oftentimes they were overlooking really crucial due diligence.
Right. And so Akazoo exploited that frenzy to their advantage.
Exactly.
So they deliberately targeted this SPAC route, knowing that they could slip through the cracks.
Yeah, I mean, it's certainly a possibility. I mean, they knew that not everyone would be as thorough in their vetting process.
Right.
Especially when they're faced with a company that's promising to revolutionize, the music streaming world.
Right. And it was almost like a financial sleight of hand. They dazzled investors with these promises of disrupting the industry.
Right.
While quietly obscuring the truth behind their, quote, impressive financials.
Right. And there's also the psychological element at play here, right?
Oh, yeah, for sure.
It's easy to get caught up in that FOMO, that fear of missing out.
Yeah.
Especially when everyone's talking about, the next big thing.
Yeah.
And, that desire for a quick return can sometimes cloud our judgment.
Oh, yeah, absolutely. Even for, the most experienced investors.
Yeah. Even the pros can fall for this.
Yeah. And so it's almost like a greed clouding their reason, wouldn't you say?
Yeah, I think that's a fair assessment.
But let's talk about these fabricated financials for a moment.
Okay.
How did they manage to pull this off?
Well, I mean, did they just invent numbers out of thin air? I mean, how did they do it?
Well, it was a bit more sophisticated then. That Akazoo strategically chose to operate in emerging markets, places where information was a little harder to come by and verify.
Right.
And so they weaponized that lack of transparency to their advantage. So they basically created this smokescreen by focusing on regions where traditional due diligence would be much more challenging to conduct.
Exactly. And they knew.
They knew that most investors wouldn't have the resources or the inclination to conduct, on-the-ground investigations in places like, Southeast Asia or South America.
Right. So, I mean, it would be very costly and time-consuming to do that.
And so even if they did, I imagine Akazoo had ways to cover their tracks, right?
Oh, absolutely. I mean, they probably had a whole arsenal of, deceptive tactics ready to deploy.
Right.
Fake invoices, shell companies, maybe even bribing, local officials to corroborate their claims.
Wow.
I mean, it was all very carefully orchestrated.
Yeah.
Designed to fool even the most skeptical observer.
That's wild. I mean, it's almost impressive in a disturbing sort of way.
Yeah.
But thankfully, Quintessential Capital Management wasn't fooled.
Right.
They saw through Akazoo's charade, and, I think they're kind of the heroes of this story.
Yeah, for sure. They're the ones who exposed the truth.
Yeah. And so tell us more about how they cracked this case.
Well, Quintessential Capital is known for their very forensic approach to uncovering corporate fraud.
Okay.
And, I mean, they had a hunch that something was amiss with Akazoo, right?
Yeah.
They meticulously analyzed the company's financials, they scrutinized their claims, and they even went so far as to test their app in various countries to see if it actually worked as advertised.
So they're the ones who actually discovered that the app was practically unusable in many of the markets.
That's right.
Where Akazoo claimed to have millions of users.
Yep, they couldn't even get the app to work in some places.
That's crazy.
Which, obviously raised some serious red flags.
Right.
I mean, they also noticed some glaring inconsistencies in Akazoo's financial reporting. The negative cash flow, despite claims of profitability, the suspiciously low marketing spend given their alleged growth. It all pointed to a very carefully constructed lie.
It's like peeling back the layers of a rotten onion.
Yeah.
Each layer revealing a new level of deception.
Exactly. And what's remarkable is that Quintessential Capital achieved all of this using publicly available information.
Wow.
Right? It's a testament to the power of critical thinking and thorough investigation.
Yeah.
I mean, even the most elaborate scams can be unraveled with a bit of skepticism and a willingness to dig deeper.
Yeah. We've talked about Akazoo's meteoric rise and their spectacular downfall, the role of the SPAC frenzy, the CEO's shady past, and their hedge fund that brought them crashing down.
Right.
But what's the takeaway for our listeners?
Wow.
What lessons can we glean from this cautionary tale?
I think first and foremost, it underscores the critical importance of due diligence.
Right.
Investors, whether they're seasoned professionals or, individuals just dipping their toes into the market, they need to be incredibly thorough in their assessments.
Yeah.
Especially when dealing with companies operating in, less transparent markets.
Yeah. So don't just take a company's word for it.
Yeah.
Do your research. Dig into the financials, and if something smells fishy, it probably is.
Yeah. Trust your gut. If something seems too good to be true, it probably is.
Yeah, and another key takeaway, I think, is this urgent need for greater regulation and oversight, particularly within that SPAC market.
Yeah, for sure. I mean, we need stronger safeguards in place to prevent companies like Akazoo from, exploiting loopholes and defrauding investors.
It's a wake-up call for regulators.
Absolutely.
I mean, we can't solely rely on companies to self-regulate.
Right.
I mean, there needs to be a system that prioritizes investor protection and ensures market integrity.
Couldn't agree more.
And finally, I think this saga serves as a reminder to be critical of the information that we consume, even if it's coming from seemingly reputable sources.
Right.
We live in an age of information overload, and it's easy to get swept up in the hype.
It is.
And so we need to sharpen our critical thinking skills.
Yes.
Question everything and seek out, diverse perspectives.
Absolutely. I mean, don't just rely on one source of information.
Right.
Do your own research, talk to other people, get different viewpoints.
Yeah.
The Akazoo story is a perfect example of how, even in the digital age, deception can be surprisingly easy to orchestrate and, shockingly difficult to detect.
Well said. Now, before we wrap up our deep dive into the murky world of Akazoo,
Okay.
there's one more piece of the puzzle that we need to examine.
All right.
What happened after the dust settled? What were the lasting consequences of this financial fiasco?
What were the repercussions?
Exactly.
Hmm.
So stay tuned as we explore the aftermath and the implications for the future of investing in Part 3. Welcome back to our deep dive into the Akazoo scandal. So far we've seen how this seemingly promising music streaming company turned out to be an elaborate house of cards, leaving investors scratching their heads wondering how they fell for such an audacious scam.
Yeah, it's a pretty wild story.
But the story doesn't end with Akazoo's implosion.
Right.
The fallout from this fiasco had far-reaching consequences, raising some critical questions about accountability and the need for systemic change.
Absolutely.
And what's so fascinating about the Akazoo case is that it wasn't just the company itself that faced the music.
Right.
Their auditor, Crowe, also found themselves in the hot seat
Oh, yeah?
for their role in enabling this deception.
It came to light that Crowe had failed to conduct, a thorough audit of Akazoo's financials, essentially giving them a free pass despite, all the red flags we've been talking about.
Yeah, they missed or perhaps ignored some pretty obvious warning signs.
Right. And the penalties that Crowe faced in 2023 serve as a stark reminder that auditors play a really vital role in maintaining the integrity of financial markets. Their failure to adequately scrutinize Akazoo's books, allowed this fraud to persist for much longer than it should have.
It makes you wonder how many other companies might be out there right now embellishing their financials while auditors turn a blind eye.
Yeah, it's a chilling thought.
It really is.
It definitely raises concerns about, the current state of auditing practices and whether there's a need for tighter regulations and oversight.
Yep.
I mean, some experts argue that, the auditing industry needs a major overhaul to really prevent, future Akazoo-like scenarios.
Yeah, and it's such a valid point because investors, both big and small, rely on auditors to provide, an independent and objective assessment of a company's financial health. And if that trust is broken,
right,
the entire system becomes incredibly vulnerable.
Absolutely. And, the Akazoo case really serves as a cautionary tale for everyone involved in the financial world.
Yeah.
It highlights the importance of, ethical behavior transparency and holding those responsible accountable for their actions.
Okay, so we've talked about, the immediate consequences of the Akazoo scandal, the penalties, the scrutiny of the auditors, and the calls for greater oversight. But let's zoom out a bit and consider the broader implications of this story.
Right.
When we look at the bigger picture, the Akazoo case is unfortunately just one example. In a long history of corporate fraud and financial misconduct, that has plagued markets for decades.
Yeah.
From Enron to WorldCom to Theranos. These scandals chip away at public trust, and they could have devastating consequences for individuals and the economy as a whole.
Absolutely.
Yeah.
I mean, it's easy to forget that these aren't just, abstract financial concepts.
Right.
Real people suffer real losses
Yeah.
when companies engage in these fraudulent activities.
Yeah, people lose their savings, their jobs, their homes.
Exactly. It can be really devastating.
Yeah.
And it's not just, individual investors who are affected. Pension funds, university endowments, charitable organizations. These institutions can also be significantly impacted by corporate malfeasance.
Right.
It really undermines the stability of the entire financial ecosystem.
So what can we do to prevent future Akazoos from happening? How can we make the system more resilient to these kinds of scams?
Well, for one, I think we need stronger regulations and more robust enforcement mechanisms.
Okay.
Regulatory bodies like the SEC need to be equipped with the resources and the authority to effectively investigate and prosecute corporate wrongdoing.
Okay. And what about the role of investors? We've talked about due diligence.
Right.
But is there more that they can do to protect themselves?
Oh, absolutely. Investors need to be more proactive in demanding transparency and accountability from the companies they invest in.
Yeah.
Don't be afraid to ask tough questions, scrutinize financial statements, and engage with activist investors who are pushing for positive change.
Yeah. So it sounds like it really requires a collective effort.
It does.
Regulators, investors, even the media. We all have a part to play in holding corporations accountable.
Absolutely.
And fostering a culture of integrity.
That's right. Ultimately, it's about creating a business environment where honesty and transparency are valued over short-term gains, and where unethical behavior is, swiftly and decisively addressed.
Well said. And as we wrap up our deep dive into the Akazoo scandal, let's leave our listeners with a final thought.
Okay.
In a world saturated with information, it's more critical than ever to be discerning, to ask questions, and to demand transparency. Don't be afraid to dig deeper, to challenge assumptions, and to speak up when something seems amiss.
Yeah.
Because as the Akazoo story demonstrates, even the most elaborate scams can be unraveled with a bit of curiosity and a healthy dose of skepticism.
Couldn't agree more.
Thanks for joining us on this deep dive. Until next time, stay curious, stay informed, and as always, stay vigilant.